What if you didn't need to own it to benefit from it? For centuries, access was locked by capital, paperwork, geography. That lock is starting to crack. Assets, fractured into digital pieces. Buy, sell, 24/7, right from your phone. Who really owns what? And who wins when ownership goes digital? Welcome to Tokenized Assets. Imagine a world where you could own a fraction of a skyscraper, a piece of a famous painting, or a share in a wind farm's future revenue, all from your phone. This is the future being built with tokenized assets. At its core, tokenization is the process of converting rights to a real-world asset into a digital token on a blockchain. Think of it as creating a secure digital wrapper for a physical or financial asset. This digital token acts as a verifiable proof of ownership, representing your specific stake, whether it's full ownership, a small partial share, or specific rights to the value an asset generates over time. The possibilities are vast. For example, illiquid assets like real estate can be made divisible and easily tradable. Traditional securities like stocks and bonds can be settled instantly on 24/7 markets. High-value art and collectibles become accessible to a global audience. Commodities like gold can be owned directly, without costly storage. Even intellectual property and future income streams can be securitized and sold. By moving ownership onto a transparent and immutable digital ledger, we replace slow, paper-based contracts and costly intermediaries. Ownership becomes digital, programmable and transferable across the globe in seconds, unlocking liquidity and creating new investment opportunities that were previously out of reach. Tokenization is a game-changer because it directly dismantles some of the biggest, most stubborn barriers in traditional finance. For decades, high entry costs, slow and expensive intermediaries, and geographical restrictions have locked many people out of prime investment opportunities. By representing real-world assets as digital tokens on a blockchain, we can fundamentally rewire how value is owned and exchanged. Let's explore the three core benefits this unlocks. First, and perhaps most revolutionary, is fractional ownership. Think about assets that typically require immense capital, like a commercial real estate building, a piece of fine art, or a stake in a private company. Instead of needing hundreds of thousands of dollars, tokenization allows you to buy a small fraction, a digital sliver of that asset. This means you can invest with much smaller amounts, gaining exposure and diversifying your portfolio in ways that were previously impossible for the average investor. Second, a massive boost in liquidity. Traditionally illiquid assets like real estate or private equity are notoriously difficult to sell, often involving months of paperwork and costly brokers. With tokenization, these assets can be traded on secondary markets, 24/7, just like stocks. This constant accessibility not only makes it easier to buy and sell, but can also lead to more accurate price discovery and potentially unlock a liquidity premium, making the asset itself more valuable. Third, global accessibility. Investment markets are often siloed by geography. A person in Asia might find it incredibly difficult to invest in a US real estate project. Because tokens exist on global, borderless blockchain networks, anyone with an internet connection can potentially participate, subject to local regulations. This creates a single, unified global market for assets, expanding the pool of potential investors and democratizing access to wealth creation on a planetary scale. Ultimately, tokenization transforms static, illiquid assets into dynamic, programmable, and highly flexible financial instruments for a new digital age. This is not an experiment led by small startups alone. Major banks, investment firms, and financial institutions are already tokenizing assets. They are doing this because tokenization reduces transaction costs, speeds up settlement times, improves transparency, automates compliance, and record keeping. Behind the scenes, the financial system is being rebuilt using digital infrastructure. Tokenized assets are powerful, but they are not without risks. A digital token does not automatically guarantee legal ownership. The real value depends on regulation, legal frameworks, and enforcement. Key challenges include legal clarity across countries, asset custody and security, platform reliability, regulatory approval. Without proper regulation, tokenization becomes speculation rather than true ownership. Ownership is shifting from physical possession to financial exposure. In the future, individuals may hold small portions of many different assets rather than fully owning one. Portfolios will be diversified across property, businesses, and digital assets, all managed digitally. Instead of asking, "Do you own it?" the real question will be, "What exposure do you have?" Tokenization creates winners and losers. Those who adapt early gain access, flexibility, and opportunity. Those who rely on outdated systems may struggle to compete. This shift does not eliminate wealth, it changes who can participate in creating it. Ownership is evolving, from paperwork to digital participation. Get ahead of tokenization now. Like, share, and subscribe to The Wealth Mystery.